Hello? Hello there. Hello there. Something suddenly just happened. I don't know what, but all of a sudden, StreamYard went down on me. It just crashed all of a sudden. So I do apologize. I don't know what happened. It's a live show. So we are going to get these sort of like technical issues every now and then. But literally, it's the first time that's ever happened. So I do absolutely apologize for that. It's the very first time this has ever happened. So I am very, very, very sorry. Fortunately, I've also lost all my stuff I had prepared for this broadcast. But anyway, we have to do the best we can. And the show, as always, must go on. Anyway, let's get cracking anyway. Today is obviously the NFP day. So happy NFP day. And with all the drama going on in the market, for once, the market is actually looking at this again. You know, I remember back in the day, the NFP used to be a major, major market mover. It's since then sort of lost a bit of its drama. But with all the drama happening over the last couple of days, we should talk about, of course, in a minute, I do think this is now front stage. But anyway, before we get into the NFP, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, with the risks at hand before entering any trade. With that out of the way, let's get started. So let's face it, the last 48 hours or so, and it's continuing, has been a total bloodbath in the market. Total bloodbath. I mean, in fact, the market experienced its worst trading day since 2020. And that was the early stages of COVID. Yesterday, 2.5 trillion, that's with a T, trillion, was wiped off the S&P 500. The Mag 7, Magnificent 7, which has been the four front runners of this bull run we've seen for quite a while, lost a combined amount of 1.03 trillion yesterday. 1.03 trillion. The biggest victim of this, as you would, you should watch my video yesterday, was Apple. Because Apple dropped a whopping 9% yesterday and lost just a little bit under 300 billion yesterday. So we all know the reason for this. We all know what's driving market sentiment at the moment in such a negative fashion. And that, of course, is obviously the fear of a trade war following the Trump's administration's tariffs, or Liberation Day, which happened yesterday. Recent developments, of course, now is China has come back, retaliated with 34% of their own tariffs on US goods, which again is not helping the market's mood. So this is why the market today is looking at two things. One is we've got Jerome Powell speaking later today. Obviously, he's the Fed chair, and they're looking at him to see if he can give the market a little bit of comfort, maybe drop hints of possible rate cuts. Personally, I think it will say the word uncertainty a lot, which won't really give us any indication. The other thing, of course, what the market is looking towards, looking for some sort of, boost, is, of course, the NFP. But here's the question. Will the NFP give the market a much needed boost, or will it be the final nail in the coffin? Now, of course, you're going to ask, what is the NFP and why is it important? This is for those who are new to trading and just starting out. I'll explain to you what the NFP is and why it can be a major market mover. Now, the non-farm payroll, NFP, is a report that presents the number of new jobs created in the US during the previous month, not including farm workers. Hence the name non-farm payroll. Incredibly imaginative, I know. But why does it matter? Why does it matter? Why is it important? And why do Forex traders in particular look at it? Well, the NFP is considered important as the change in the number of positions created does give a clear indication of the overall performance of the economy. Now, of course, it makes sense. A better than expected number, so a higher number of new jobs created, is considered good news and can potentially lead to US dollar strength. A worse than expected number is considered bad news and can potentially lead to US dollar weakness. And here's the thing about the NFP. And we'll go through several scenarios in a little while as well to discuss this. But again, the market looks at it in several different ways. It's not as simple as a good number, strong dollar, bad number, weak dollar. It's not as easy as that. Nothing worth having is ever is. Now, the other thing why the market watches this very closely, of course, is because the job data can also impact the Fed's interest rate decisions as well. Affects interest rate decisions, but potentially can affect it. They can decide whether, if the market is strong, they raise rates. The market or the job market is low, they may cut rates to try and boost growth. So it can have a big impact on the Fed's decision, which of course today is important. Bear in mind, we've got Powell speaking later this evening. And here's the other thing, which is going to be quite interesting today. After all the drama of yesterday, the US dollar came under humongous pressure. In fact, it had its worst trading day since 2022. And if you look at a lot of the majors, okay, you had the euro dollar at 6-month high against the cable, British pound US dollar 6-month high, dollar CAD at a 3-month low, a dollar yen at a 4-month low. So the dollar was severely being hit yesterday because of this drama with the T word. So anyway, let's move on to the announcement today. So the NFP. Now, the expectation is for the number to come in around 137,000. The previous figure, or the previous number, was 151,000 new jobs created. Now, if we look back over the last 6 months, October, there was 44,000, shocker. November, 261,000 new jobs. December, 323,000. January, 125,000. And February, 151,000 new jobs. So as you can see, it's been quite erratic. So we're not seeing necessarily a steady decline in the job market, which is good. But the implications of what's happened since January can really show that maybe this whole threat of tariffs and the fear of tariffs is really going to start affecting the job market. Because, as I've said in several broadcasts, there is so much uncertainty in the market that businesses are looking back and thinking very carefully before they hire new roles, because they don't know about if they're going to be able to expand or grow or what is going on certainly with this whole tariff situation. So I think March is going to be, although bear in mind this number is going to come in from what March was. It's going to be the real clear indication, okay, of the effect of the uncertainty in relation to tariffs. Has it taken effect yet? As well as that's not just the NFP coming out, of course. We've also got US unemployment rate. Expectation is for it to come in at 4.1%. The previous reading was 4.1% as well. So there's no expectation for that to increase. As well as that, also just as important in many ways as well, we have US average earnings month on month. Expectation is 0.3%. US average earnings year on year, expectation 3.9%. It's coming out as well. So again, like I say, March is hopefully going to give us a clear indication if indeed the trade war uncertainty, which we're getting at the moment, is it affecting the job market? Or is it giving us an indication that it's going to begin to affect the job market? And really, as well as that, is the other big fear. The other big fear as well, of course, is it going to give us indications, which is one of the things which has been scaring the market a lot over the last couple of trading sessions, is are we set for a recession? This is the big concern. Now, JP Morgan has raised the chances of a US and global recession this year, the chance of it happening this year, they've raised it from 40% to 60%. Now, unfortunately, again, sorry, which I did have several nice little images I wanted to show you, including, some a survey by traders about the biggest risk to global economy was tariffs. But since we had our little technical hiccup at the beginning of this broadcast, I've lost it all. So never mind. But you can look back on some of the other videos. I've used it a lot. Anyway, the other question, of course, because gold has been shining bright, is the NFP going to cause gold's next move higher? Or is it going to give the confidence in the dollar? So that's going to be the other big thing. But anyway, how long have we got? We've got just under 2 minutes. Let's do some scenarios very, very quickly. Okay, scenario one, NFP is announced higher than expected, leads to potential dollar strength. Potential scenario number two, when NFP is announced lower than expected, causing the USD to weaken. Potential scenario number three, NFP is announced as expected or close to expectation and does not change the mood of the market. Potential scenario number four, NFP announced lower than expected, dollar and the market gets boost because a Fed rate cut is priced in, because then they believe the Fed's going to cut rates. Potential scenario number five, NFP announced higher than expected, weakens the market and the dollar, as they then expect the Fed not to cut rates. And scenario number six, NFP is announced okay, but the US unemployment rises and average earnings disappoint. So nobody looks at the NFP. And finally, potential scenario number seven, which can often happen, NFP is announced okay, market does not pay any attention, and nothing happens. That's often a danger when you're doing one of these big events like that. Okay, so let's have a choice. I mean, people can come in and tell me what they want to watch, but I'm going to watch the euro on this announcement, because how long we've got? We've got less than 7 seconds. Less than 7 seconds. Let's have a look. I need to get my phone ready so we can do it. 1 second. All right. Calendar. Okay, something's happening. Something's happening. What is it? 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 Right. Right. NFP comes in higher than anticipated. Higher than anticipated. Actually comes in at 228,000. So better than anticipated. Better than expected. Unemployment though comes in at 4.2%. So also a little bit higher than anticipated. Let's have a look at average earnings. Average earnings year on year comes in worse than anticipated, at 3.8%. Remember, it's 3.9 expected. Having earnings month on month as anticipated, 0.3. So NFP does come in better, a lot better than anticipated, 228. But unemployment, US unemployment, comes in higher as well. And average earnings indeed has slightly disappointed as well. So let's have a quick look at the initial reactions. Obviously, the market to the euro is not really moved a lot because it's trying to anticipate, of course, what this all means. A better NFP, unemployment rising, and earnings are disappointing. Let's have a look at gold. Okay, gold has come under a little bit of pressure now. So maybe a slightly weaker dollar, but to be fair, I think this is more to do with bond yields and bonds rising. That's why gold's getting slightly weaker. Under the $3,100 mark, however, we're still trading quite a bit above that potential trend line there. Let's have a look at how the sterling has done as well on this announcement. Okay. Very little reaction at the moment. Because like I say, obviously what you've got now, you've got the two. I've got a comment. Hey there. How you doing? Good to see you. Funny Doob. Very good to see you. Yeah, so obviously the market is obviously trying to digest. We've got a good NFP, unemployment slightly up, and there's also all the other drama going on. Let's have a look at something else going on as well. Let's have a look at the dollar yen. See the initial reaction of the dollar yen. Again, pretty tepid as well, reaction on that as well. So, yeah. Okay, so like I said, with announcement at the end of the day, NFP higher than expected, a lot higher than expected, really. If you look at it, it's a lot higher. You know, that's 228,000, a lot higher than anticipated. Obviously, opinions were, or the consensus was, going to be 135,000, so it's coming a lot higher than expected. But average earnings year on year is lower, 3.8%, which is obviously holding it back. And unemployment in the US has risen only by a little bit, though, to 4.2%, where it was anticipated to be 4.1%. So it's going to take a while for the market to digest this information, if it's a good or bad thing. But one thing you can safely say at the moment, there isn't clear signs yet that this trade war and these tariff fears is affecting the job market. Don't forget, of course, you can talk to me anytime. This, of course, is a live show, so you can simply say hi, things of that nature. If you wish, you know, simply say hi or ask me questions or basically tell me what you think. You know, share me your opinion, what you think about the NFP. What do you think about this trade war? What do you think about China's retaliation today? You know, so you can feel free to talk to me anytime you wish. If you have any questions or simply want to say, hey, like Funny Doob did, which is cool. As well as that, of course, as well as that, if you're watching me later on YouTube, because I notice a lot of people do go back to watch the recordings. They don't always manage to catch the lives, but they watch the recordings. If you have a question, then you can put it in the comments below. I will see it, and I will reply to that comment next time I go on live. And don't forget, I go live every single day to cover a whole range of things. And we will do a lot of these watch-alongs as well. Hopefully there'll be a bit more excitement in the market than this event. But yeah, we do watch-alongs all the time as well. But we're all live all the time. And as well as that, of course, don't forget, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button if you like. And if you like this type of content, and you put up with me, by all means, give me one of these. It's nice to know that you like what I do. Anywho, as well as that, if you're watching us on Twitter as well. Follow us if you like. I think that's what's Twitter. It's X now, isn't it? I'm showing my age. It's X. Keep forgetting about that. Yeah, if you like it, give us a little heart. Okie dokie. So anyway, in a nutshell, today's big market announcement was higher. NFP did expected a lot higher, actually. Very surprised by that. But US unemployment rises as well, which seems to cancel each other out. And average earnings year on year have disappointed. So this is what the market, by the looks of things, is trying to digest right now. Anywho, if there is no questions, or no one wants to say hi or share any views, not a problem. Not a problem. We'll leave you to say then, in that case, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your research, do your diligence, and of course, know the risks at hand for entering any trade. Till next time, every single one of you, trade safe.